A trader must understand that before entering any trade, whether it is swing trading, long-term positioning, or even scalping, the first step is always to understand the market structure. Without that foundation, every decision becomes guesswork, and consistency becomes almost impossible. When you learn how the market builds its moves step by step, everything begins to make sense. Hello traders, and welcome to the ComLucro channel. Today is Thursday, April 2nd, and in this video, we are going through a Smart Money Concepts market structure masterclass analysis across the weekly, daily, and 60-minute charts on the Euro-Dollar Forex pair. We will break down how the weekly structure defines the overall context, how the daily time frame reveals the internal development of the retracements, and how the 60-minute chart helps us read the next potential structural move. By the end of this analysis, you will see how all timeframes connect to form one clear market narrative. So, if this type of content is valuable to you, remember to like the video, subscribe to the channel, and enable notifications so you don't miss the upcoming lessons. And feel free to share in the comments which topics you would like us to explore in future videos. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to continue producing this kind of educational content. Before we begin the chart study, a quick note about the annotations you will see on the chart. The letters indicate the time frame and the state of the structure. W refers to the weekly structure, and D refers to the daily structure. The letter P marks a possible event, meaning a level where a structural event could occur, and F marks a failed event. The numbers organize the sequence of movements and represent key structural points such as low 1, high 2, higher low 3, and higher high 4. Within the ComLucro framework, every structural event is tied to these levels. A change of character shows a shift in control during a movement, and a break of structure always refers to the level being broken, not the order of the event. Possible labels do not mean the event needs confirmation, but rather that the event has not happened yet and could occur at that level. In contrast, a change of character, once formed, does require confirmation through a break of structure that follows it. For confirmation, the market must complete the sequence of impulse, retracement, and then a new impulse breaking structure. So when reading the chart, focus on how each movement connects from one numbered level to the next. Now, let's begin the review of the structure. The first important reference in the structure is weekly low 1, which marks the exhaustion of the previous bearish phase. From this point, price makes an impulsive movement, creating the first weekly change of character 1, and reaching weekly high 2. After that, price retraces and forms weekly higher low 3. From weekly higher low 3, price initiates a new impulsive movement, breaking weekly high 2 as weekly break of structure 2, and reaching weekly higher high 4. Then price pulls back from weekly higher high 4 to weekly higher low 5, with a short and quick correction forming approximately 4 candles. From weekly higher low 5, price begins another impulsive movement, breaking weekly higher high 4 as weekly break of structure 4. This movement takes longer to develop, forming approximately 27 candles, which represents about 27 weeks, from July 28, 2025 to January 26, 2026. Now, price begins to retrace from weekly higher high 6 and moves down toward weekly higher low 5. At this point, price is positioned in the lower part of the discount zone and inside weekly supply 5, which was created and lifted by the impulsive movement from weekly higher low 5 to weekly higher high 6. And right now, price is reacting around weekly possible change of character 5. To better understand how this reaction is developing, we now move into the lower time frame. Now looking at the daily time frame, this entire structure is developing inside the retracement that is currently happening on the weekly time frame. In other words, what we are seeing here on the daily chart is the internal structure of that last weekly pullback. We begin with daily high 1, which is the same as weekly higher high 6. This is the last high left by the weekly structure before the retracement started. From this point, price moves down and creates a change of character 1. However, this change of character is not yet confirmed because for a change of character to be valid, it must be followed by a break of structure. Price continues moving down and reaches daily low 2. At this level, the market is sitting at a point where a break of structure could occur, So this level is currently labeled as daily possible break of structure 2. This means the structure is now in a transitional phase. The change of character from daily high 1 to daily low 2 has occurred, but it still needs confirmation. And that confirmation depends on whether price breaks below daily low 2. Now, there is an important concept to understand here. Every impulsive movement during its development leaves at its origin a possible change of character. Because if price retraces and breaks that origin, a change of character will occur. In this case, the movement from daily high 1 down to daily low 2 leaves behind a daily possible change of character 1 at its origin. At the same time, this movement has already created a daily change of character 1. But this change of character still requires confirmation. So we have two things happening at the same time: a possible change of character at the origin, and a change of character that has already occurred, but is not yet confirmed. So, to summarize, the move from daily high 1 to daily low 2 creates a change of character 1, but it remains unconfirmed. Now, for this structure to develop properly, the retracements that are happening from daily low 2 must follow the ComLucro framework, and that means price needs to retrace at least to the 0.382 Fibonacci level. This is the minimum requirement for a valid retracement. So, if price retraces to the 0.382 level or higher, and then moves down and breaks daily low 2, that would confirm the structure. Because at that point, we would have a complete sequence, an impulsive movement, followed by a valid retracement, and then a new impulsive movement breaking structure. Right now, that confirmation has not happened yet, because price is still reacting around daily low 2, so the market remains inside a key decision point. And to better understand how this decision is developing, we now move into the lower time frame. Now, looking at the 1-hour structure. This entire formation is developing inside the daily retracement. We begin with 60-minute high 1. From this level, price moves down and creates a 60-minute change of character 1. However, this change of character is not yet confirmed because it still requires a break of structure. Price continues moving down and reaches 60-minute lure 2. And this level is now acting as 60-minute possible break of structure 2. From 60-minute low 2, price reacts and begins a retracement, forming 60-minute lower high 3. This retracement moves upward very close to 60-minute high 1, but it doesn't break it, so the structure remains within the same range. At this point, price appears to be initiating a new impulsive movement that could break 60-minute low 2 and confirm the 60-minute possible break of structure 2. Why does this movement appear impulsive? Because after the initial bearish movements from 60-minute high 1 to 60-minute low 2, price retraced back into the premium zone of that move. And now, price has returned to the discount zone, which is where continuation movements typically develop. So, the logic is, the move from 60-minute high 1 to 60-minute low 2 creates a change of character 1, but it remains unconfirmed. For confirmation, price needed a valid retracement, which has already occurred, followed by a break below 60-minute low 2, which now appears to be developing. So the market is building the conditions for a possible continuation, but it has not confirmed anything yet, and this keeps the structure in a transitional state, where the next impulsive movement will define whether the change of character becomes confirmed or not. Now, an important observation, and this is something that can strongly test a trader's patience and ability to read the market correctly. If we observe the last bullish impulsive movement, it was formed in only 4 candles, which means 4 hours. However, what initially looked like a simple retracement turned into a full bearish impulsive movement, from 60-minute high 1 to 60-minute low 2, and this movement took 118 candles to develop, which represents 118 hours. This is where many traders struggle. A trader who was not mentally prepared for this type of development and kept trying to buy during this movement, believing it was only a correction, likely experienced significant losses. This is why having a clear trading plan is essential. Accepting losses is part of the process, and most importantly, not fighting the market is what preserves both capital and consistency. So, when we step back and look at the full picture, what this chart shows is not randomness. It shows a sequence of impulses, corrections, and structural events that build the market narrative step by step. On the weekly time frame, we clearly see a bullish structure that is now in a retracement phase. On the daily time frame, we see that retracement developing internally, already creating a change of character, but still waiting for confirmation. And on the 1 hour time frame, we can see how the market is attempting to build the conditions for that confirmation. So the key takeaway here is simple. Structure is not about predicting what the market will do. It's about understanding what the market is doing right now. At this moment, the market is in a decision phase. A valid retracement has already formed, and now everything depends on whether price can break structure and confirm the move. Now, from our study and perspective, there is an important point here. The only scenario where buying at this weekly supply zone would make sense is if the market first creates a bullish change of character and then confirms that shift with a bullish break of structure. Without that sequence, there is no structural confirmation for buying. And if you are a short-term trader, especially looking for scalping opportunities, it is important to be very careful, because the daily structure is currently in a downward movement that is still waiting for confirmation through a break of structure. At the same time, the 60-minute structure is also developing in a bearish direction, again waiting for confirmation. Because of that, the most aligned approach with the current structure would be to look for short opportunities on the lower time frames, such as the 15-minute and 5-minute charts. And this is where discipline matters the most, because the market does not move in a straight line. It moves in phases, and each phase requires patience, clarity, and the ability to wait for confirmation. So instead of trying to anticipate the move, focus on reading the structure. Let the market show you when the sequence is complete, because in the end, it is not about being first. It is about being aligned with the structure. If this video helped you gain more clarity, make sure to like the video, subscribe to the channel, and turn on notifications so you do not miss the next lessons. And let me know in the comments which topics you would like us to explore in future videos. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support the channel and a smart investment in your growth as a trader. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to keep producing this kind of educational content. Please also remember that the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you will find complete courses designed as a true trading masterclass. We teach liquidity, market structure, higher time frame analysis, and supply and demand, always focused on understanding price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency, because trading is not just about charts. It is about mindset, discipline, and execution over time. Our main courses include Smart Money Concepts, ICT, Technical Analysis, Trading Psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you better understand how markets really behave. Thanks for watching, and I will see you in the next video.